Oh, I am super excited about today's video because today we're going to look at a Dividend King offering 6% yield. So, this type of business that has been around forever, that has been increasing its dividend for the past 50 years, and yet the stock price tumbled by more than 50% in 22. Kind of crazy, right? And I'm not talking about 3M today. I'm talking about VF Corporation. Dividend Growth Investors, bonjour. My name is Mike Yehu, and I am the founder of Dividend Stocks Rock. I also have this YouTube channel to help you invest with more conviction so you can enjoy your retirement. So today we're going to talk about VFC. Great business. It has been founded more than 100 years old. It used to sell mittens. Kind of crazy, right? Who would have thought that a mittens manufacturing business would still be around 100 years later and be among the longest, strongest dividend growers in North America? Well, the trick with VF Corporation is it's not just an apparel company. It's a lot more about a brand management company. Today, we're talking about 12 brands, $12 billion in sales in 2022, but the bulk of it is Vans, the North Face, and also Timberland. For the rest, you have Dickies and Supreme, but not big brands yet. What you have been able to do for each of those brands is to acquire them at a good price, make them grow, and sometimes they just sell those brands, they just sell those assets. They do pretty much like that asset recycling strategy that we see with REITs most of the time. Once they have reached a good peak, they just sell it, cash their profit, and then move on to another brand, which is exactly what they did recently by spinning off Contour that has their jeans such as Wrangler 2 years ago, and then they bought Supreme about a year ago, and they intend to generate some synergies between Supreme and Vans to build a stronger brand and eventually increase their sales. In terms of geographic diversification, as you can see, they're pretty much present across the world. They have those iconic brands, which helps a lot, and they are able to sell in pretty much all parts of industrial countries. Now, you can see that through the channels, wholesale, brick and mortar retailers is a very big part of their business model. However, the pandemic had that good side where it opens the door to more direct to consumer DTC through digital channels. So those sales were about 10% of sales in 2019, and today it's up it doubled to 20% of all their sales. However, there are a lot of challenges, and there are a lot of good reasons why VFC stock price tumbled by more than 50% this year. So in their most recent presentation, VF Corporation did a great job in resuming all the challenges that they're facing. So we're talking about changing consumer dynamic, how they buy, what they buy, making that you keep your brands as like top level with a strong marketing and evolve with your customers. The other thing is obviously volatile global market environment. We're talking a lot about those lockdowns that happen in Asia, especially in China, where not Vans, but VF Corporation has a lot of manufacturers. And that also create a problem in terms of this supply chain disruption. They had a lot of problems to fill in their inventory. And then at one point, the recession is looming, and we might have too much inventory. So you can see that it's a very difficult environment to navigate with. You obviously have a lot of inflationary pressure, cost of raw materials increasing. It hurts cash flow, it hurts the margin, and it puts VF Corporation in a very difficult place for 22. Those challenges as reflected on the cash from operation and also their margin. And this is one of the biggest reasons why the company struggled so much on the market, why a lot of investors are losing patience. And especially right now, every time that there are bad news, revised guidance, investors are really quick to pull out the gun and shoot their companies dead and move on. This is what's happening with VF Corporation as it faced multiple challenges. One of them, as I mentioned earlier, supply chain disruption. In their presentation, they have disclosed their strategies and how they have diversified their supply chain across many countries and many manufacturers. So you can now see that only 15% of units are being generated in China. I'm expecting this number to reduce in the future as the company kind of realized that their chain supply must be ironclad, must be super solid, and now they have to evolve to make sure that those chain supply disruption, the stopping, the lockdowns around the manufacturers doesn't happen in the future. So while the challenges are real, management came with a 5-year plan, which is pretty much the trend, right? You're in trouble, and then you come up with those 5 years magical plans. They told investors, we're gonna bring mid-single to high single-digit revenue growth. Same thing for earnings per share, and we're going to generate a total free cash flow of 5.5 billions. If this happens, obviously that is by 2027. If this happens, you can count on a steady dividend increase, and then you can count on a strong bounce back from the stock price. But now, how can they make that happen? Because it's fun to say we're going to jump our revenues, but how the hell are you going to do that? They actually highlighted every single brand in their presentation to tell us how they intend to boost their marketing, change their their supply chain, and improve the customer experience when people buy. They expect a lot of growth to come from the North Face. Obviously, the interest for outdoor sports and living increased a lot after pandemic, and they're definitely driving on that. I think that Supreme will also be a good growth vector, and what they have been able to do with Vans over since the acquisition is just incredible. As you can see, since 2004, that company's revenue grew by more than 15% annualized growth rate. Over the past few years, pretty stable instead, not very impressive. I think they are able to turn that around and continue with a mid-single growth. This is what they're expecting right now, and I think they'll be able to do it. You know, that management team is well experienced. They have known how to communicate and stay in contact with their customers. They're gonna still stock the brand across skateboarding, surfing. Just want to make sure that they keep the same vibe around Vans, keeping that classic look, but probably add in a few new apparel, a few new design to make it grow a little bit better. So let's end this video with the dividend triangle. As you can see, this one is not the most impressive in terms of revenue. Nothing happened over the past 5 years. Same thing for earnings. And for the dividend, there wasn't a cut before 2020. That was due to the spinoff when they spun off Contour. But long story short, the last dividend increases are pretty thin. This is obviously a red flag. The 6% yield is also another red flag. There are a lot of challenges around VF Corporation. In my portfolio, it's not a big holding. We're talking about maybe like 1.5% of my portfolio. So I didn't go crazy on this one. I bought it during the pandemic thinking, you know what, people will still need Vans clothes, the North Face, Timberland, they're a strong brand. This company has a huge history of managing those brands, making a lot of money and generating as much growth as possible. They're marketing geniuses. I didn't see the problem here. I thought the stock would bounce back, similar to what happened with Nike. Obviously, I should have picked Nike instead of VF Corporation, but I'm fairly confident that over the long term, by 27, if they are able to put their plan together and generate that growth, well, then we're going to have a super strong company. The dividend will continue to increase. Obviously, in 23, I hope that we're going to see some number change, because if they don't, it's going to be a very bad sign. So I'm following this one quarterly just to make sure that they will eventually turn the tide around, start generating growth, because with growth will come more dividend increases. And at that point, if this happens, then I'll be able to sleep well at night. So definitely VF Corporation, not for the faint of heart. Just please do your due diligence. This is not buy and sell advice. But for me, I keep my shares. I'm still happy with it. And as long as the dividend grow, I will stay on, will hold this one. So let me know what you think about VF Corporation. Do you have any other apparel company that you like? Maybe Nike, because this one is quite popular and has done a lot better than VF Corporation. So I'm curious about your favorite apparel company. Tell me that in the comments below. And until the next week, don't forget to stay invested.